I've never seen the demand for precious metals even remotely close to what I'm seeing right now, ever in 34 years. Not even close, not by a million miles. And I will stick to what I've been saying on your show for the past 2 years. This market will define itself by the inability to source product when the music stops.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Have you heard the latest on the silver market? It's a roller coaster that no financial enthusiast can afford to miss. Just when we thought we had it all figured out, the silver markets took a hit so hard, it sent shockwaves through the trading floors. But here's where it gets really interesting. Could this be the calm before a storm of a massive bull run? Imagine this scenario. Silver prices have plummeted, but what if this is just the market taking a deep breath before skyrocketing to unprecedented heights? That's right, we're talking about a potential trend reversal that could turn the tables completely. The silver market, known for its volatility, has always been a hotbed for dramatic turns. But this time, it's not just about the ups and downs. It's about a seismic shift that could rewrite the rulebook on precious metal trading. We're staring at a market that's teetering on the edge of a $24 cliff, a critical point that could make or break fortunes. But wait, there's more to this story than meets the eye. The bond market, a key player in this saga, is casting its shadow over silver's future. And with the US non-farm payrolls data looming over us, the stakes are higher than ever. Are we about to witness a historic turnaround in silver prices? Or is this just another false dawn in a market notorious for its unpredictability? Stay tuned as we unravel the mysteries of the silver market, dissecting every move, every trend, and every prediction. This isn't just another market update, it's a front row ticket to what could be the most spectacular show in the financial world. So, brace yourselves, because if this prediction holds true, we're in for a ride that could redefine everything we thought we knew about the silver market. In the fascinating and ever-changing world of precious metals, the silver market is currently painting a picture that captures the essence of volatility and anticipation. After the recent dramatic plunge in prices, experts and investors alike are keenly watching the $24 level, a significant psychological and technical threshold in the silver trading landscape. This level is not just a number, it's a battleground where future market trends could be determined. Now let's dive into the technical analysis of the silver markets. The recent tumultuous journey of silver prices has left many traders reeling. The sharp drop, characterized by a nasty candlestick formation, raises questions about the market's direction. Is this a temporary setback or a sign of a more profound shift? The key lies in understanding the nuances of these technical patterns. A candlestick that's significant doesn't just appear out of the blue. It's often a harbinger of further movement, either a continuation of the trend or a reversal. As we approach the crucial $24 mark, the market's reaction to this level could be telling. If silver prices find support here, it could signal a buying opportunity for those waiting for cheap silver. However, this is not just about watching a price point. It's about understanding the market dynamics at play. The silver market is intricately linked to the bond market, specifically the 10-year yield in the United States. This correlation means that movements in bond yields can have a significant impact on silver prices. A rise in yields could dampen the appeal of silver, while a drop could make it more attractive. But the plot thickens when we consider the possibility of breaking above the $25 level. Such a move would undoubtedly be a bullish sign indicating a potential shift in market sentiment. The recent overbought conditions and subsequent sell-off suggest that the market is searching for value, a reset point from where silver prices can find a new equilibrium. In this context, the importance of cautious trading cannot be overstated. The volatility we're witnessing in the silver market is a double-edged sword. It presents opportunities for significant gains, but also for substantial losses. Therefore, position sizing and risk management become critical components of trading strategy in such a market. As we navigate these turbulent waters, it's essential to remain patient and vigilant. The silver market is at a crossroads, and the next few sessions could be crucial in determining its future course. Whether you're an investor, a trader, or simply a keen observer of the financial markets, the unfolding drama in the silver market is not to be missed. So keep your eyes peeled on those charts and stay tuned for what promises to be an exhilarating ride in the world of silver trading. As we continue to navigate through the intricate dynamics of the silver market, our focus now shifts to the bond market and its pivotal influence on silver trading. The relationship between silver prices and bond yields, particularly the 10-year yield in the United States, is a key piece of the puzzle in understanding the market's current behavior. The bond market acts as a barometer for investor sentiment and economic outlook, and its movements can have profound implications for assets like silver. When bond yields rise, it typically signifies a growing confidence in the economy, potentially leading investors to favor riskier assets over safe havens like silver. Conversely, a drop in yields often indicates economic uncertainty or a dovish stance from the central bank, making non-yielding assets like silver more appealing. Currently, silver traders are keeping a watchful eye on the 10-year yield. It's not just a matter of tracking its movement, it's about understanding the underlying reasons for these changes. Factors such as inflation expectations, monetary policy decisions, and economic data releases all play into the yield dynamics. A shift in any of these elements can ripple through the bond market, subsequently swaying silver prices. Moreover, the bond market offers insights into future interest rate trends, which are crucial for silver market speculation. If the bond market anticipates rate hikes, the appeal of silver could diminish. On the other hand, expectations of rate cuts could bolster silver's attractiveness. But there's another layer to consider: the psychological aspect. The silver market, like any financial market, is driven not just by economic fundamentals, but also by trader psychology. The $24 level, for instance, isn't just a price point, it's a psychological barrier. How traders perceive and react to this level can set the tone for future market movements. A bounce off this level could inspire confidence, triggering buying interest. A breach, however, could lead to a bearish sentiment, prompting sell-offs. Given these intricate connections, traders in the silver market must keep a holistic view. It's not enough to focus solely on silver price charts. One must also understand the broader economic and financial context, especially the bond market signals. In essence, navigating the silver market requires a blend of technical analysis, economic understanding, and psychological insight. The bond market's influence is a crucial factor in this mix, providing vital clues to the future direction of silver prices. As we continue to analyze these interdependencies, the silver market remains a compelling and challenging arena for traders and investors alike. In the intricate world of silver trading, the focus now turns to the psychological and technical aspects of the market. The $24 and $25 levels are more than just price points. They are crucial psychological barriers that hold significant importance for traders and investors alike. These levels represent key thresholds in the market, influencing not only trading strategies, but also market sentiment. The $24 level in particular has emerged as a critical support zone. It's a battleground where the future direction of silver prices could be determined. A strong bounce off this level could signal renewed buying interest, suggesting that investors see value in silver at these prices. It would indicate a level of confidence in the market, potentially setting the stage for a rally. On the other hand, a break below this level could lead to heightened selling pressure, as it may be perceived as a sign of weakening market strength and a loss of investor confidence. Similarly, the $25 level represents a significant resistance barrier. Overcoming this level would be a very bullish sign, indicating a strong market upturn. It would suggest that the market has not only absorbed the selling pressure, but is now poised for a potential bull run. Breaking above $25 could trigger a wave of buying activity, as it would be seen as a confirmation of a positive market trend. However, the recent overbought conditions and the subsequent sell-off have added a layer of complexity to this scenario. These market movements indicate that the market is in search of a new equilibrium, a level where value and price meet. This search for value is a critical aspect of market dynamics, as it can lead to significant price fluctuations and trading opportunities. Given these dynamics, traders and investors need to be very cautious. The volatility in the silver market is not to be underestimated. It requires a strategic approach to position sizing and risk management. A hasty or overly aggressive strategy could lead to significant losses, especially in a market that is known for its rapid price movements. In summary, the $24 and $25 levels in the silver market are much more than mere numbers. They represent key psychological and technical thresholds that could dictate the market's next moves. Understanding the significance of these levels and the broader market sentiment surrounding them is essential for anyone looking to navigate the silver market successfully. As we move forward, these price points will be critical in determining whether the market is poised for a recovery or if further challenges lie ahead. As we delve deeper into the silver market's dynamics, the impending release of the U.S. non-farm payrolls data comes into sharp focus. This economic indicator is not just a measure of employment, it's a beacon that guides market sentiment and influences monetary policy decisions. For the silver market, the anticipation surrounding this data release is palpable, as it could significantly impact price movements. Commodity strategists at TD Securities, TDS, have outlined a strategy that hinges on the outcome of this critical data. Their analysis suggests a nuanced approach to trading silver in light of the expected payroll figures. The key takeaway here is the anticipation of an upside surprise in the non-farm payrolls, which could ripple through the rates market, affecting the Federal Reserve's timeline for interest rate adjustments. Such a development would likely extend the downward trajectory of precious metals, including silver, as higher interest rates diminish the allure of non-yielding assets. The recent shift from buying exhaustion to selling activity in precious metals, as noted by TDS, reflects a market that is rapidly adjusting its stance. This transition has been more abrupt than initially anticipated, with silver prices edging towards lower targets. This shift is significant, as it underscores the market's sensitivity to macroeconomic indicators and trader sentiment. Interestingly, TDS's advanced positioning analytics indicate that algorithmic trend followers, who play a considerable role in market dynamics, have largely liquidated their net long positions in silver. This liquidation has contributed to the downward pressure on prices. However, the possibility of further selling activity remains elevated, especially if silver prices break below key levels like $23.90/Oz. Such a break could trigger a wave of short acquisitions, adding to the bearish momentum. Yet, there's a tactical aspect to TDS's strategy. They suggest skating the bid, essentially adjusting their position to anticipate further price declines towards $22.50/Oz, while setting a stop at $25.35/Oz to protect profits. This approach reflects a calculated response to the market's volatility, balancing risk and reward in a rapidly changing environment. The broader implication for silver traders and investors is clear. The market is in a state of flux, heavily influenced by economic data and monetary policy expectations. The upcoming non-farm payrolls data will be a critical determinant of the market's direction in the short term. A stronger than expected jobs report could reinforce the bearish trend, while a weaker report might temper this sentiment. In conclusion, the silver market currently stands at a critical juncture, with the U.S. non-farm payrolls data acting as a key catalyst. As traders and investors await this release, the strategies and expectations outlined by TDS offer valuable insights into the market's potential reactions. Navigating this market requires not only an understanding of the economic indicators, but also a keen sense of timing and risk management. As we move forward, the silver market remains a compelling arena for those adept at interpreting and responding to these complex economic signals. In our final analysis of the silver market's current state, we arrive at a pivotal moment where all signs point to a potential turning point. The intricate dance between economic indicators and silver prices suggests that we could be on the cusp of a significant shift, possibly heralding a major bull run. Reflecting on the technical analysis, market sentiment, and the critical influence of economic data like the U.S. non-farm payrolls, it's clear that silver is at a crossroads. The anticipation of an upside surprise in a payroll data, coupled with the current market dynamics, could set the stage for a dramatic change in silver's trajectory. For traders and investors, this moment is laden with both opportunity and caution. The market's volatility requires a measured approach, balancing the potential for high returns against the inherent risks. As we've seen, silver's path is influenced by a myriad of factors, from macroeconomic trends to psychological barriers. As we wrap up this journey through the silver market's labyrinth, remember that while the signs point to exciting possibilities, they require careful navigation. And if you found this analysis insightful, don't forget to hit that subscribe button for more updates and deep dives into the financial markets. Lastly, it's crucial to remember that while we delve deep into market trends and forecasts, this is not investment advice. Always do your due diligence and consider seeking advice from a financial professional before making any investment decisions. Stay tuned, stay informed, and let's keep our eyes on the ever-evolving narrative of the silver market.